And so we have another question for a high income earner.
Uh-huh.
So the client wants to know, can investing in certain businesses or funds help high income earners save on taxes?
So there's every year we get people saying, wanting us
Hmm.
to look at these different opportunities. So there are companies out there that market to high income people because they are accredited, and that being accredited allows you to invest in these private deals that the general public cannot. And so, in order to incentivize those investments, a lot of them are structured in ways to create tax advantages. And there's a million different versions of this. So some of them are perfectly legitimate, some of them are on the aggressive side, some of them are outright fraud. So you got to be careful. So a few years ago, there was a whole bunch of conservation easement syndications going around. And so conservation easement is you take a piece of property, it's a market value of whatever, $5 million, and you say, okay, we're going to put this aside and we're going to put a conservation easement on this property, meaning it cannot be developed. And as a result of that, the market value drops enormously, which rightfully, and because you can't build on it, then what are you selling? You can go, so you take a basically a charitable deduction effectively of whatever that market value difference is. Now, this got onto what the IRS calls their dirty dozen list because they were being abused. Sometimes the conservation easements, the values that were being presented were aggressive. Sometimes the property didn't exist at all, right? It's just outright fraud. Okay, so you got to be careful with that kind of stuff. So there are different company strategies that are either passing along deductions that you might be able to use, they're either passing along credits that you might be able to use, or they are possibly recharacterizing some income. So those are the three basic buckets. And yeah, they do exist. The legitimate ones are legitimate, but there are a lot of people who play fast and loose that you got to be careful of. So yeah, it does work. And generally your buy-in price, they'll do a presentation and they'll say, okay, if you're in the 37% bracket and you get this and you get that, then you're gonna pay us $100,000, but you're gonna get 150 back on your taxes. And yeah, sometimes that works. You got to really be careful with the assumptions that they're making. And if those numbers in that model applies to you, then yeah, great. That might work. If you're in a slightly lower bracket, or if their strategy puts you into a lower bracket, then those numbers sometimes don't work out. So you got to be really thorough and model out what it is that they're offering and how that's going to affect your particular situation. Because again, it depends.
So definitely a depends question.
Yeah.
Okay. So we have a remote work question. Client wants to know, do I owe taxes on multiple states if I work remotely for a company based in a different state?
Sometimes. Depends on the
Sometimes.
states.
So it
So
depends.
yeah, it depends. Two giant pains in the ass with this particular question are California and New York. Other states are less, more or less, the other 48 states are easier to deal with. In California, they view the money coming from a California company being paid to you in wherever, Missouri, as California sourced income. And so they're going to treat that as you being involved in the state. In New York, for example, even if you're a W-2 employee in New York, the way they list their W-2s is that they display the full amount of your W-2 as being taxable in New York, and then you have to go back and file a tax return saying I'm a non-resident and your withholding isn't right, and all this kind of stuff. So it's a giant pain. Yeah, it just depends on the two states involved. And if you're in a no income tax state, Nevada or Texas or Florida, then you don't have to worry about your home state, but you might have to worry about the source state. So it just varies. That's a real it depends question.
It depends, guys.
Yeah.
So we have an investment question.
Uh-huh.